You're here in China, you've done your most recent assessment, you've raised your forecasts for growth here to 6.7%. What was behind that decision?
Well, we've been seeing the performance of the Chinese economy, and there was fairly strong growth in the first quarter. We see strong growth in the rest of the world, which is also helping. We see the Chinese government providing some support, both through fiscal policy and the way that credit policy was being managed. So we think this is the right forecast. Now, we do expect the economy to slow a little during the course of the year, but we think that the 6.7% forecast is the right one.
And you talked about the urgency of reforms now, and there's a consensus amongst some economists that we have this slower growth in the second half, but stability, and that's providing something of a window. If that's the case, how big is that window? What is the time frame that policymakers here have to enact these reforms that we've been talking about for some time now?
Well, first, reforms are underway. We'd like to see those reforms intensified, accelerated, and sustained. And that means the rebalancing of the economy to new technology sectors, to support the household sector, household services, services that households will want, and also to begin to tame the problems of credit growth that have created vulnerabilities in the corporate sector, especially the state-owned enterprise sector, where borrowing has been very substantial. We think all of that should proceed in a steady way in order to reduce those vulnerabilities, in order to find new drivers for the economy over time.
And you touched on the debt question there, which of course comes to many people's minds when they look at the Chinese economy. I know last year you said there should be a plan for tackling corporate debt, that should be a priority. Otherwise, there would be serious problems. Yeah. Are you seeing that plan put into action? What more needs to be done on the corporate debt front?
Well, right now we see two issues. One is that the financial sector has been growing in number of institutions, lots of non-bank institutions, growing in complexity with some new products and lots of interconnections. On that problem, the authorities have really begun to intensify their scrutiny, tightening financial supervision of financial institutions. We think that's welcome and will contain risks in the financial sector. Then there's the question you raised about the lending from the financial sector to the corporations. It's very important that there be deleveraging. So far, credit growth has slowed, but it's still growing, and the ratio of credit to the size of the economy is still rising, and that needs to be brought under control. And as well, the destination of credit has to change so that you don't have a situation where the companies getting the credit are really not using the money for productive purposes. So in the end, they're destined to have problems of servicing their debts.
And you talked about some of the trade barriers that are put in place here in China, and you focused particularly on the services sector, and that there could be more action there. In your 2 weeks of discussions with policymakers here, what have you heard from them on areas in the market, sectors that they could open up, sectors they might be focusing on to allow more foreign investment?
Well, they are looking at ways in which they can interact with the United States. They're having a dialogue with the United States, the so-called 100-day review, and that's to try to find ways to have better interactions with the U.S. economy and better relations with the U.S. government. They are looking at domestically the process of rebalancing from old, more outmoded growth drivers to new and more promising growth drivers, and that will include opening up the service sector and trying to promote a sector that can be supported by household income growth over a sustained period.
Let me ask you about the currency, because they've changed the formulation of fixing to include this counter-cyclical factor, and many people see this as the stronger arm of the state, basically, more control of the currency, and that is a step back for the internationalization of the renminbi. Is that a concern that you share?
You know, we had a discussion of this, and we understand their motivation to be always to be careful, to have some measure of control to avoid undesirable overshooting of the exchange rate. Now, our preference, of course, is that over time they move to greater exchange rate flexibility with the aim of ultimately having a floating exchange rate system. We believe that they want to go in that direction, and that they've designed this mechanism in a way that preserves their ability to continue to introduce greater flexibility over time.
Let me switch focus, if I may, to Greece. We've got the Eurogroup meeting happening tomorrow. How close are we now to a compromise on Greece?
We come into these, we'll be observers at the discussion tomorrow, as we always are. We come into this discussion with the same assessment we've had for a long time, that a program, Greece's program as any other, has to stand on the two legs of suitable policies that will sustain the Greek economy, but also suitable finances, in this case, a suitable debt operation that will make Greece's future sustainable. Now, we think that on the first, that a lot of progress has been made. In our discussions, the other European institutions' discussions with Greece, with the steps Greece has taken, including passing legislation. What's left to be discussed is the debt subject, and we hope that progress can be made on that in the Eurogroup meeting.
A loan in principle from the IMF is on the cards.
Well, we're open to all kinds of approaches, but yes, we have offered that one way through this might be to use a technique that was really reasonably commonly used in the days of where the indebtedness was to banks, the so-called approval in principle route, which was used in the Latin American debt crisis, that would allow us to approve the program in principle and then begin in earnest once the question of debt had been decisively settled.
How concerned should we be about the UK economy, given the political uncertainty there after the election and this renewed uncertainty around Brexit?
Well, it's for the UK and Europe to make clear the path forward on Brexit. There obviously will have to be discussions of that in the wake of the election and whatever changes there are within government. We certainly understand that this will be a period of uncertainty until the politics are clarified and the way forward is clear. But we think that the UK economy can continue to do well, and that we certainly hope that the Brexit discussions can proceed in a systematic way.